The story of money is not the story of gold or paper. It is the story of trust. And trust, once broken, never fully returns. Somewhere between the promise of a king and the price of a loaf, humanity invented the most dangerous illusion ever conceived. That value could be stored in symbols. Wood, metal, paper, code. The materials changed. The faith did not. Long before skyscrapers and stock tickers, England's treasury ran on sticks split in two, each half recording a debt. The tally stick system powered the realm for centuries. When the king borrowed, he didn't mint new coins, he issued notches on hazelwood. Peasants accepted them as payment because they believed the other half existed in the royal vaults. That was all money ever needed, belief. And when that faith wavered, so did kingdoms. In 1834, the British government finally decided to burn the ancient tallies. The flames got out of control and incinerated Parliament itself. The metaphor was perfect. When trust burns, institutions go with it. By the 17th century, the wooden promise gave way to parchment. In Amsterdam's trading halls, merchants discovered a new kind of alchemy, transforming future earnings into present power, credit. The Bank of Amsterdam pioneered it, but England perfected it. In 1694, the Bank of England was born not as a vault, but as a printer issuing notes backed by the debts of a nation. Money was now debt. Debt was now money. Every pound in circulation represented someone's obligation. It was brilliant, terrifying, and utterly irreversible. For centuries, rulers had sought gold. But here was something greater. The power to create wealth with ink. The state borrowed from bankers, bankers lent to merchants, merchants paid soldiers, soldiers conquered colonies, and colonies sent their spoils back to the bankers. The circle was complete. An empire built on ledgers, not swords. Then came a man who wanted to accelerate the process, to make credit itself the engine of civilization. His name was John Law. A Scottish mathematician, gambler, and fugitive, Law fled to France and convinced the regent that money could be multiplied without limit. He founded the Mississippi Company, promising that paper shares represented boundless riches in the New World. Paris believed him. They printed and speculated until the city shimmered with phantom wealth. But when investors tried to turn paper back into metal, there was none. The illusion cracked. Fortunes evaporated overnight. The mobs filled the streets, demanding gold that no longer existed. Law escaped in disguise, leaving behind a ruined currency and a model. Centuries later, his formula would return in Wall Street boardrooms and central banks alike. Print, inflate, collapse. The rhythm of progress. While France drowned in paper, another power learned to balance illusion with control. In the narrow alleys of Frankfurt's Jewish ghetto, Meyer Amschel Rothschild began a family business in coins. His 5 sons spread across Europe. London, Paris, Vienna, Naples, Frankfurt, forming a financial nervous system faster than any government's. Couriers carried coded letters between them, delivering market news before anyone else. When nations went to war, the Rothschilds financed both sides, then financed the peace. It was not greed that made them powerful. It was timing. They understood that industry, not aristocracy, would define the next century. Steam engines needed iron needed capital, and capital needed coordination. The Rothschild network provided it all. They loaned to railways, coal companies, and governments that sought to industrialize. Money no longer served the state. It built the state. They did not invent the Industrial Revolution, but they bankrolled it. Factories rose like cathedrals of iron. Smoke crowned the skylines of Manchester, Birmingham, and Glasgow. Yet beneath the soot lay a truth. The machines belonged to those who financed them. Each gear, each furnace, each shipment of coal was collateral. The working class produced the wealth, but the banker owned the means of production, through debt. Speculation followed invention, like shadow follows flame. Joint stock companies sold dreams to the masses. Railways promised prosperity. Bubbles followed tracks across the land. Between 1840 and 1846, thousands of miles of rail were financed on credit that barely existed. When confidence faltered, fortunes crumbled. Shares once traded like gold became worthless paper. The Industrial Revolution was not just an age of steam, it was an age of schemes. Britain, master of trade, learned to weaponize its financial supremacy. Its empire was not enforced solely by redcoats, but by credit. Bills of exchange, letters of credit, and bonds financed the extraction of wealth from colonies. India's peasants paid taxes, not in coins, but in promises, debts that fed the city of London. When the British East India Company collapsed under its own corruption in 1772, the Bank of England quietly absorbed the losses. Private risk, public rescue, a pattern that would echo centuries later in the bailouts of modern banks. By the late 1800s, the world was addicted to the idea that progress could be borrowed. But credit is a drug with side effects. The panics of 1825, 1873, and 1890 proved it. Each collapse followed the same ritual: optimism, overextension, collapse, repentance. In 1873, when the Vienna Stock Exchange imploded, the shock spread across continents. Factories shut down, workers starved, and governments tightened the gold noose. Every failure was blamed on confidence, that ethereal element that no law could guarantee. Gold was the anchor, the promise that for every note printed, there was a glittering ounce somewhere in a vault. It gave the illusion of discipline, but gold did not make money stable. It made it scarce. Nations hoarded it like treasure, starving their own economies to maintain the myth of sound money. The gold standard chained industry to geology, binding human progress to the limits of Earth. When miners couldn't dig fast enough, economies froze. The system worshipped scarcity and punished ambition. Then the world went to war. The industrial machines built with borrowed capital turned their gears to destruction. Cannons, shells, battleships, financed by bonds and backed by faith in victory. When the smoke cleared in 1918, the empires that had ruled the 19th century were bankrupt. The Rothschild network, once the invisible hand of finance, faced a new breed of power. Central banks tied to governments that could print at will. Gold was abandoned. Inflation devoured savings. Paper, at last, ruled supreme. Money lost all anchor to material reality. The Weimar Republic became the stage for the final absurdity. Wheelbarrows of banknotes for a loaf of bread. But this was not madness. It was mathematics. When faith dies, the currency follows. Nations will always print, because promises are easier than discipline. A century later, the printing never stopped. Only the form changed. Credit cards, derivatives, digital ledgers. The banker no longer wears a top hat. He writes algorithms. The factory is not made of brick and steel, but of data centers humming in the dark. And yet the structure is unchanged. Debt creates dependency. Dependency sustains power. The industrial age became the digital one, but the same ancient covenant endures. Belief for obedience. Today, central banks conjure trillions with keystrokes. The money supply expands like a tide, lifting asset prices and drowning labor. Productivity rises, wages stagnate, speculation reigns. We call it progress, but it is still the same dream John Law sold to Paris, that something can be made from nothing. In every century, there is a moment when the illusion flickers, when people sense that the value they chase exists only in shared imagination. That moment never lasts long because the system must survive. It feeds on amnesia. Each generation forgets the last collapse, convinced it has built safeguards. Each new banker believes he is different from the one before him. But history keeps its own ledger, and the entries always balance. The banker who bought the Industrial Revolution did not simply finance machines, he purchased the future. In doing so, he bound humanity to an idea that credit, once created, can never be repaid, only rolled forward, that progress itself depends on the perpetual expansion of debt. We inherited that idea. We still live inside it. Our skyscrapers are its monuments, our currencies, its prayers. And if history has taught anything, it is this. When belief in money falters, so too does civilization. Because in the end, every economy is a religion, and every religion needs its gods.